Interesting day in the U.S. equity markets. Let's take a look at the NASDAQ, which finished the day up just short of 0.75%. And it was the only index in the green. The Russell, the Dow, and the S&P all in the red today, all finished negative. As a matter of fact, the S&P and the Dow are working on 2 consecutive days lower now. It's interesting to note that today in the NASDAQ, it got its first close above 10,000 ever. And also the high today was 2.5% higher than the previous all-time high, which obviously happened prior to the shutdowns and the economic damage by the shutdown. So we're way above the old high while we await some of the worst economic data that we've seen since the Great Depression. So there's a little bit of a divergence from that, but technology doesn't seem to be hurt by it, mainly because if we have stay at home or work at home again, technology is one of the beneficiaries of that. We've also got low interest rates, which I'll get to in a second. But looking at the sector breakdown, information technology, IT, was the only sector that was positive. So when you're looking at the 13 major sectors, all of them were down except for IT. And then the subsectors within IT, not even all of them were higher. You had storage, semis, services, and software all up. The other 2 sectors within the IT sector were negative as well. So it was really a broad-based sell-off except for this one specific thing, and that broadening rally that we saw at the end of last week, where the NASDAQ was up along with the other indices, but the Russell was leading and the Dow and the S&P were beating the NASDAQ, although all 4 were up. That seems to have gone away, at least in the short term, where I'm not seeing a broad-based rally. We're seeing technology lead, and that's likely not a healthy market. But if the others can start catching up and the NASDAQ continues to rally, then all will be forgotten. And then lastly, we got the FOMC meeting today and the announcement today, along with the press conference. Nothing changed except for Jerome Powell again reassuring the market that the Fed has plenty of tools in his toolbox. They did try to convince the market that the Fed will put those tools back in the toolbox once things get back to normal, but really we haven't seen them do that except for one time during 2018, in which case the market sold off and they subsequently took some of the tools back out of the toolbox. But they were able to reassure the markets that they're there for any sort of problems in terms of liquidity, although they referred back to fiscal policy in terms of getting actual money out to the public to spend.